we're going to introduce you to one of the best wealth building tools in America. That's the Small Business Administration's 7A program. Now, through this, you can borrow up to $5 million to buy your very own small business. Now, the beauty of this program is the cash flow from the business is used to pay down the loan. So your current salary doesn't really come into play, and most likely you're going to leave your current job to go work for your business. So this means that almost anyone can buy their own small business. So now the down payment requirements can range from 0 to 10%. So basically the way this works is the SBA will lend 90% of the money for the acquisition. And the other 10% needs to come from one of several sources. So either cash that you have on hand, investors, it can come from the seller in the form of them maintaining equity. So as in, if they only sell you 90% of the business and they keep 10%, then technically your down payment requirement's been met. Or seller note. So what a seller note is the seller will finance a portion of your acquisition. And as long as that note, what's called a 24-month standby, so meaning there are no payments made during that 24-month period, that can count towards the down payment, so that can cover the 10% that's required. So by SBA guidelines, none of the money for the down payment actually needs to come from you, the buyer. But you get SBA loans through a bank. So you do not go directly to the government and apply for an SBA loan. You go to a lender in which they will give you a loan that is backed by the SBA. So you're getting a loan from a bank. And the banks have discretion on who they lend money to. So they are not allowed to be more lax on their standards than the SBA guidelines, but they are allowed to be stricter than the SBA. So what we see is that lenders are probably not going to let you get away with putting zero money down unless you're buying a business that you currently work for. Lenders will do that at zero down. They love those loans because as a current employee of the business, they know that you know the business very well. You can also get a 0% down SBA loan if you're buying a business within an industry that you already own a business in that industry. So if you're using it to grow your business, then you don't need to put any additional funds down. But in most cases, if you're a new first-time buyer, you're going to have to put some money down. And typically what our lenders are requiring is 2.5% down if you're buying within an industry that you have very strong direct experience in or very clear transferable skills into. They will do 2.5% down in those situations and 5% down in most other situations. Now, most SBA loans, they do have a variable interest rate. Typically, you'll see interest rates, they're prime plus 300. So they will follow what's called the Wall Street Journal prime rate. You can just Google that to see where it is today as you're watching this video. It's based off the federal funds rate. So if you follow the financial news and they talk about the Fed raising or lowering rates, that's going to have a direct impact on the SBA loan rate. Now, there are banks out there that offer fixed rate loans, but typically the down payment requirements are higher for those loans. So they are much more attractive loans. They're going to give you better terms. They're going to give you a lower interest rate at a fixed rate versus the higher variable rate, but they also require a higher down payment. So if you have a lot of money to put down, you'd want to consider getting one of those fixed rate loans. Most people are going to have to take out one of those variable rate loans, and then you run your business for a few years, and then you can refi into a fixed rate loan. Now, this program does come with risks. Anyone that owns more than 20% of the business is going to be required to provide a personal guarantee for the loan, meaning that you are personally on the hook if the business defaults. And as a part of that guarantee, the bank is required by SBA guidelines to collateralize the loan to the extent possible. So now, if you don't have any assets, let's say you live in an apartment and you don't have any real estate, to the extent possible is zero. But if you have an extensive portfolio of rental properties or even just your family home that has equity in it, then they're going to use that as collateral for the loan. So the SBA loan is the best tool out there for the average American for building true multi-generational wealth. But it is important to keep in mind that it does come with that personal guarantee and that you're going to have to collateralize your personal assets. So there is a great deal of risk involved in taking out that loan. So the SBA 7A loan is a powerful tool for business acquisition. If you want to learn more about buying businesses using the SBA loan program, give us a follow. We post videos constantly, and go check out our channel to go learn more about the process of buying your own small business.